Did you know that 97% of term insurance never pay out a death benefit? Term insurance promises security and peace of mind, but do you really know what you're signing up for? It's crazy how people don't get a payout from their term insurance. But it's not because insurance companies are being sneaky. It's usually because most people will live longer than the term period the policy will cover, or they let their policy expire, or they just don't understand the type of insurance they are purchasing. Term life is great because it's affordable and provides a lot of coverage. But remember, if you live past the term period, your policy ends and there's no payout. Hey folks, welcome to Beyond the Beneficiary, where we discuss everything you need to know about life insurance in 2025. I am Shemaiah Davis with over 6 years of experience in the life insurance industry. And today, I will be spilling the tea about little known facts and details about term life insurance to help you make more informed decisions. By the end of this video, you will uncover the truths the fine print hides and learn how to maximize your policy benefits. Please don't hesitate to check out my previous video, Basic Life Insurance Terms You Need to Know in 2025, where I go in depth about basic life insurance terminology you might not understand. Terms that I will be using in this video. Now let's dive in.
What is term insurance? Breaking down the basics. Term, an abbreviation for temporary life insurance, is a type of life insurance that provides coverage for a specific period, such as 10, 20, or 30 years. It's essentially a straightforward agreement. If you pass away within the policy's term, your beneficiaries receive a death benefit. This payout can help cover expenses like funeral costs, mortgage payments, or your children's education. Unlike permanent life insurance policies like whole life or universal life insurance, term life insurance doesn't have a cash value component or investment features. It focuses solely on providing a safety net for your loved ones in case of your unexpected death. Term life insurance comes in various flavors, each catering to different needs and circumstances. Level term is the most common type, offering a fixed death benefit and level premiums throughout the policy term, providing predictable and stable coverage. Decreasing term is often used to cover a mortgage or other decreasing debt, as the death benefit gradually declines over time while premiums remain level. Increasing term policies, on the other hand, feature a death benefit that increases over the term, typically at a fixed rate or an index, which can help keep pace with inflation or growing financial obligations. However, the premiums increase as the death benefits increases. Renewable term allows you to renew your policy at the end of the term without a medical exam, though premiums will likely increase based on your age. Lastly, convertible term. This type of term policies give you the option to convert your term coverage to a permanent life insurance policy, such as whole life or universal life, providing flexibility for future needs, but usually at a significantly higher cost. Understanding these different types of term insurance can help you choose the best option to match your specific financial goals and circumstances. One of the main advantages of term life insurance is its affordability. Since it's atemporary coverage, the premiums are generally lower than those for permanent life insurance policies. So anytime you see ads making claims of very high life insurance coverage for very low cost, 9 times out of 10 they are talking about temporary life insurance. This affordability makes it an attractive option for individuals who need a high level of protection without the higher cost. The fixed term nature of the policy also provides clarity and predictability, as you know exactly how long you'll be covered and what the premiums will be. Term life insurance is particularly well suited for young families, single parents, and anyone with financial dependence. It offers a cost-effective way to ensure your loved ones are financially protected if you're no longer there to provide for them. If you have a mortgage, outstanding debts, or young children who rely on your income, term life insurance can provide peace of mind knowing they'll be taken care of. The pros and cons, what they tell you versus what they don't. Term life insurance is often touted as a simple and affordable way to protect your loved ones. You'll commonly hear about its low premiums and high coverage amounts, making it an attractive option for those on a budget. The flexibility to choose the coverage term, aligning with specific needs like paying off a mortgage or covering children's education, is another selling point. This straightforward approach to life insurance can provide peace of mind knowing your family will be financially secure if the unexpected happens, which is all true. But there are super important things that people don't always talk about. While your initial premiums are low, they can significantly increase upon renewal after the initial temporary period expires. This jump in cost can be substantial, making it difficult to maintain or convert coverage, especially as you get older. Also, unlike permanent life insurance, this point cannot be emphasized like this any clearer. Term life insurance is temporary. Yes, you heard that right. The phrase term is temporary. Also, unlike whole life insurance, term policies don't accumulate cash value. If you outlive your policy term, you won't receive any return on your investment. It's essential to remember that term life insurance is purely for protection and not a savings or investment tool. Finally, like most insurance policies, if you miss premium payments, your coverage can lapse or is canceled, leaving your beneficiaries unprotected. So why is term life insurance often recommended? Its affordability and high coverage make it ideal for those with temporary needs and limited budgets. It's a practical choice for young families, those with mortgages, anyone with significant financial obligations, or anyone looking for temporary life insurance coverage for other personal reasons. It may not be the best fit for everyone. If you're looking for lifelong coverage, the potential for investment growth, or the ability to borrow against your policy, then exploring permanent life insurance options might be more suitable. Ultimately, the best choice depends on your individual circumstances, financial goals, and risk tolerance. The renewal trap and premium escalation. When your term life insurance policy reaches the end of its term, you're typically faced with a few options. You can renew the policy for another term, but be prepared for a significant jump in premiums or in extreme cases. You may not be able to qualify for any traditional life insurance coverage if your health has changed immensely. This renewal trap catches many people off guard, as premiums can easily increase fivefold or more due to your older age and potentially declining health. For example, a $500,000 policy with a $50 monthly premium at age 30 could cost $250 or more per month to renew at age 50. This dramatic increase can make it difficult to maintain coverage, especially on a fixed income. What to do instead? To avoid falling into the renewal trap, it's wise to plan ahead. One option is to convert your term policy to a permanent policy, such as whole life or universal life insurance, before the temporary period ends if your insurer offers this feature. Note, not all term coverages offer this feature. This allows you to lock in lifelong coverage even if it's a much higher premium. Another proactive approach is to shop for a new term policy well before your current one expires, ideally while you're still in good health and can qualify for lower rates. Or you can also apply for a permanent life insurance coverage before your temporary coverage expires, while you're still in good health and can qualify for lower rates. By reassessing your financial needs and coverage options early, you can secure affordable protection without the shock of skyrocketing premiums. Don't hesitate to click the link below this video to schedule a call with me if you have further questions or need help with deciding what the best options for you is. Riders and hidden features. Are you paying for extras you don't need? Riders are optional add-ons to a term life insurance policy that provide additional benefits, often for an extra cost. Common riders include the accidental death benefit, which pays an extra amount if the policyholder dies due to an accident; the waiver of premium rider, which exempts policyholders from paying premiums if they become disabled and unable to work; and the critical illness rider, which provides a lump sum payment upon the diagnosis of a qualifying serious illness. While these riders may seem attractive, they come at an added cost that can increase your premium significantly, sometimes by 10 to 20% or more. Policyholders should carefully evaluate whether these extras genuinely align with their financial needs, or if they're simply an upsell tactic that benefits the insurer more than the insured. Cost versus value. Are riders worth it? The value of riders depends on individual circumstances. For example, an accidental death benefit rider may be redundant if you already have comprehensive health and life insurance coverage. Similarly, a critical illness rider might overlap with existing health insurance, making it an unnecessary expense. However, for those without adequate savings or a robust safety net, these riders can provide critical financial support during unexpected life events. To assess whether a rider is worth it, consider your current financial situation, existing coverage, and the likelihood of needing the additional benefits. A good rule of thumb is to avoid overloading your policy with riders unless they address a specific and significant risk in your life. Consulting with a licensed life insurance broker agent can also help you make an informed decision tailored to your needs. Don't hesitate to click the link below this video to schedule a call with me if you have further questions. What insurance agents might not emphasize. Insurance agents often recommend term life insurance because it is straightforward, affordable, and typically easier to sell. However, in some cases, the advice may be commission-driven, as term policies are relatively quick to set up and attract a broader market. While term insurance is a great option for many, the emphasis on low premiums may overshadow a deeper discussion about whether it's truly the best fit for the individual's long-term financial goals. For instance, agents may not thoroughly explore other policy types, such as whole or universal life insurance, that could better suit individuals with lifelong coverage needs or those looking to build cash value. This commission-driven approach could result in policyholders choosing term insurance without fully understanding the long-term implications, such as the cost of renewing or converting their policy later in life. The importance of understanding coverage needs. A common pitfall of term life insurance is underestimating the amount of coverage or the length of the term needed. Insurance agents may not always stress the importance of calculating sufficient coverage to fully protect your family's future. For example, an agent might suggest a 20-year policy for a young parent, but without careful consideration of inflation, rising education costs, or long-term debt obligations that will make this coverage fall short. Additionally, choosing a term that's too short could leave your families unprotected during critical financial periods, such as mortgage repayment or a child's college years. To avoid these missteps, it's vital to ask the critical question, how much coverage is truly enough to secure my family's financial future? This involves evaluating all current and future expenses, such as outstanding debts, living costs, and potential income replacement to ensure your policy fully aligns with your financial responsibilities. Smart strategies to take advantage of to maximize your term coverage. Starting early is one of the smartest moves you can make when purchasing term life insurance. Younger buyers typically enjoy significantly lower premiums because they are at a lower risk of health issues and mortality. For example, a healthy 25-year-old can lock in a 20-year, $500,000 term policy for a fraction of the cost compared to someone in their 40s. Buying early not only saves money, but also ensures you secure coverage when it's most affordable. Additionally, aligning the term length with major life events is essential for maximizing the policy's effectiveness. For instance, choosing a term that coincides with your mortgage payoff timeline ensures your loved ones can keep the family home if something happens to you. Similarly, selecting a term that covers your children's education years provides financial protection for their future, giving you peace of mind during critical health periods. Regularly reviewing your term life insurance policy is another key strategy for ensuring it meets your evolving needs. Major life changes, such as marriage, the birth of a child, or a career change, may require adjustments to your coverage amount or term length. Annual reviews help you assess whether your current policy still aligns with your financial responsibilities. Taking advantage of these strategies ensures your term insurance provides maximum value, adaptability, and financial security for your family's future. When term insurance isn't the best choice. While term life insurance is an excellent option for many due to its affordability and simplicity, it may not be the best fit for everyone. High net worth individuals, for instance, often require more complex financial strategies than what term insurance provides. Their needs may include estate planning, wealth preservation, or minimizing tax liabilities, which are better addressed by permanent life insurance policies that offer lifelong coverage and a cash value component. Additionally, term insurance is not ideal for those seeking investment-like returns or a policy that can accumulate savings over time. Since term policies have no cash value and expire at the end of the term, they do not offer the long-term financial benefits that certain permanent policies provide.
So there you have it, folks. Knowledge is your greatest policy. Term or temporary life insurance offers powerful benefits, affordable premiums, substantial amount of coverage, and flexibility. But its drawbacks, like expiration traps or the lack of cash value, demands careful consideration. Understanding these truths empowers you to make informed decisions that aligns with your financial goals. Term insurance can be a game changer, but only if you fully understood how it works and plan to strategically maximize its potential. Don't just settle for a policy. Tailor it to your needs and future aspirations. Now that you know what others might not tell you, it's time to take charge of your financial future. Review your current policy, assess your coverage needs, and consult an independent advisor like myself today by clicking the link below this video to schedule a strategy call if you have further questions or need help deciding. Please share your thoughts and comments below. Hit that like, notification, and subscribe button if you find this video educational and informative.